Diagnostic Trading Hour. I'm your host, Darrell Martin. If you have any questions, feel free to give me a call. You can reach me at 877-927-6648. Again, that's 877-927-6648. Checking out the market today. Wow. Everything, a lot of red on that screen going on right now, huh? We got the S&P is down 27 points. We got the Nasdaq down 56. The Dow down 4 points. 5 points. And just keeps on moving. And then we got the, we got copper down almost 2% on the day. And we got silver down 1% on the day. Corn is up 4 points there. And soybeans is down 5, almost 6 points. We got oil moving 4% on the day, down $3.58. So we'll go through and talk about some of these here in a second. We got natural gas down 1.3. We got euro dollar down 48 pips. We got pound dollar down 18 pips. Aussie dollar down 16. U.S. yen down at 46 pips. U.S. franc up 21 and U.S. Canadian up 39. So the dollar stronger across the board on the currencies. And just, a lot of crazy stuff going on right now. Obviously, the election results came out last night. And as we all know, Obama brought it home. He went ahead and won again. And the House, of course, did keep, the Republicans did keep the House as expected. And the Senate was able to retain their majority. And so what does that mean? Well, that means 2 more years like the last 2 years. Not a good scenario. Trying to laugh so I don't cry, right? And again, not a good scenario right there for the markets, and the markets obviously have shown that that was not a good scenario. We have all these things going on right now. We have the gridlock in Congress, which wasn't, which had a chance to be over, possibly, not over. And so now that we know that basically everything is the exact same as it was a few weeks ago, except for now we just don't have to listen to election commercials every 5 seconds. It's going to be an interesting 4 years. So we got tax hikes right around the corner, and without some sort of grand agreement, then what do you do if you're thinking about this? If you're a mutual fund manager, if you're a hedge fund manager, and as far as you know, taxes are going up. Do you take your profits now, or sometime between now and the end of the year, or do you hold on to them and guaranteed pay more in taxes whenever you close next year? Obviously, you're going to take it now versus a guaranteed 10% hit on your profits by holding them over to the next year. And so, that, of course, that number varies based on amount and everything else, but they know that they'll lose, 5, 10, 15% of their profits if they hold on to them. So with that reality in place, they don't have much of a choice but to sell off. So it's going to be interesting to see how this, ends up by the end of the year. Now, historically, when the incumbent has won, the market did move up by the end of the month. So, and that's a very consistent historical number. So on the seasonality side of diagnostic trading. Short term, of course, markets are not happy about what's going on, and they don't see any real resolution. So that may inhibit the seasonality there. We are, of course, going to have the upcoming, Christmas rally, Santa Claus rally, etc., that starts sometime in, this month. Supposedly. So it'll be interesting to see if we actually do have a positive month, and if the Santa Claus rally, the retail and Christmas and everything sort of takes over on the economy. But it's going to be a hard battle the entire way. So with having a fiscal cliff of massive government cuts across the board on basically welfare plans and on military spending, without some sort of good resolution on that, that obviously is going to affect money going into the economy, which will affect GDP even more than it's already affected it, which will, of course, continue to hurt business growth, therefore continue to hurt the ability for unemployment to get better. So Obama kept his job, but a lot of people may be losing theirs if things keep going like they are. And, just looking at things right here, and I'm not so much leaning one way, on the radio here right now towards one candidate or another. I'm just calling it how the fundamentals are. So, like it, don't like it, that's the reality of it. And last night I went in, I'm like, I don't know what's going to happen. I actually did a straddle on gold. I did a straddle on the S&P. The one on the S&P has done really well. It more than covered the loss on the long side of the binary, and then it more than covered the loss on gold right now, but I have till the end of the week on the gold one still. I did dailies and gold. And so we'll see how it ends up there. But so far, so good. And all risk have been covered on the trades there from that one profit on that one side of the straddle on the US 500 that I did last night. But looking at everything, you're going to have to sort of, like oil right here. Oil is dropping, just tremendously. And we'll go ahead and we'll pull up a chart. Let's see here. Zoom in on that chart over here, and we'll get oil up on it. We had the oil inventory reports come in today. They basically meant nothing because they came in right at expectations. The expectation was 1.8 million barrels. It came in at 1.8 million barrels. And so that was an increase over the previous number, but it wasn't just a huge increase, and obviously, again, was not different than the expectations. That came out right here at about 10:30. And, oil sold off a little bit more, but it already was in a big sell-off from yesterday. And, you're talking a 4+ point move here in gold, or not in gold, but in oil. It's a $4,000 move in a single day. And that's with the overnight hidden there. I'll go ahead and turn on the overnight for you so you can see the overnight as well. There we go. Change that, change the settings. We'll go in here, say, show me the extended session. And then I'll go ahead and update my intradays to show you the 10-minute bars. So there we go. So that is oil. Flat most tonight, and then just started selling off again very, very heavily. And it's been going ever since. So why would oil sell off? Well, if GDP and everything else is going to get worse, oil demand's going to go down. So less trucks moving, right? So less trucks hauling things. Less people driving. So because they don't have money, they don't have jobs. So oil, gets cheaper in that case. Now, just because the economy's good doesn't mean it gets more expensive. Just because it's bad doesn't mean it gets cheaper. Supply and demand, obviously output, everything they all do factor into that, but that would be one of the major fundamental reasons why oil is down right now. And go ahead and let's look at what came out last night. Of course we had obviously we all know, we had the elections like we just talked about, but I guess really more this morning, let's see, Switzerland here had a couple of major reports we talked about yesterday that were coming out, and we'll pull that up, and you can see a pretty big move there. Let's see, that report came out at 3 a.m. That was the foreign currency reserves. And again, 3 a.m. right about here. As soon as that came out, the franc decided to go ahead and the U.S. franc got weaker compared to the dollar based on that. And what it is that basically it's the Swiss National Bank's currency market operations and how actively they're defending the Swiss franc against other exchanges. So that's basically it's them defending their currency's value. And they were not impressed with the numbers. The numbers did come in lower than previous at 429 billion. They came in at 424 billion previously. And so the franc did get weaker on that report. To add to it, the CPI that came in at 315 just a few minutes later. Both of those numbers important numbers here. And right when that came in, that also had an impact, and that was, again, the CPI number. And the CPI is the change in the price of goods, so how much things cost. Okay? And that's the Federal Statistic Office there in Switzerland. That's bfs.admin.ch. And I'll pull that up for you. So bfs.admin.ch. And so, again, that number came in at negative came in at 0.1. The expectation was 0.3, and which not only was lower than the expectation, but it was also lower than the previous report. So, just looking at that, that was not good news for Switzerland's economy at all. And Europe as a whole was just having some issues. Now, beyond that, what else did we have that came in? We're going down. Europe had a couple other minor reports. They had the retail sales in the EU came in lower than expected. That's a medium impact report. And the industrial production report for Germany, that came in lower than expected. So both of those having a negative weighing impact. And then Draghi, the president of the European Central Bank, also came in. And it came in and it was released out there. It came out at 7:10 a.m. So he talked about a speech titled "Capitalism in the Crisis: The Future of the Market Economy." So that just seemed a little bit contrary, him talking about capitalism, but there he goes. He's talking about it. And I don't know if I don't really know the details on the speech. I didn't read it all yet. Haven't got a chance to, but I don't know if he's bashing capitalism or saying maybe we should start embracing it. But at best, my guess would be somewhere on the first possible option there. That's you can check that out under ecb.int, and you just go over to press, and then click on speeches and interviews, and then president. And you'll see Mario Draghi's most recent speech right there from today. And you can go in and see the details on that speech and read it in English if you speak English there. But went in all the details. So, anyways, and they're going into the ECB and how it works and how it's going to affect everything going forward. Now, what else have we had since then? Going through, we had, of course, the crude oil inventories. Like I said, how they came in. U.S. had a bond auction. That bond auction came in better than last time. Not a surprise, 1.68, so interest rate. And people, buying bonds. So dollar getting stronger. And then there also is today, sometime today, the Greek government debt crisis vote will be taking place. And so that'll be an interesting, scenario. The Parliament's going to vote to decide if the measure in the medium-term financial strategy for 2013, 2016, the austerity plans, if they're going to do them or not. So that's obviously a very critical vote. And those results may already be leaked out. But that's going on today as well. And then a little bit later, the employment change report and unemployment rate for the U.S. New Zealand, that's coming out at 4:45. So that'll be, of course, a big impact if you're a New Zealand dollar trader there. And a little bit later tonight, we do have an important number coming out on Australia. They've been having some big moves. And so at 7:30 tonight, the Aussie employment change and unemployment rate is coming out, 7:30 Eastern tonight. Scrolling on over and looking at tomorrow, what do we have on the docket for the day? Well, we got the pound is going to have a report coming out at 7 a.m. Eastern. Have several reports. They're going to have their bank rates, so their interest rates coming out, their rate statements coming out, their what's called the asset purchase facility, and that's the total value of money that the Bank in England will create and use to purchase assets in the open market. That number is coming out. So all those numbers come out at 7 a.m., so definitely a very potential pound-dollar trade, and you could trade that, of course, over on Nadex with spreads binaries. You could straddle the trade. And if you haven't done it already, definitely hop on over to our site, TFNN.com. Click on Nadex, and you can open an account on there. Click Create Account. And from start to funded in as little as 5 minutes and as little as $100 to fund an account. And check this out. All 8 trades I put on last night for a single contract, less than $100. So, you put all that stuff together. Now if you did more contracts, of course, it'd cost more. But all the trades combined. So, you can do quite a bit of trades for the $100. And get a demo account under here under our products and demo account over on the Nadex site. It takes about 15 seconds before we get back from commercial break. You can have your demo account set up and ready to trade. Stay right there, folks. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And, just got some emails in, some people that did the same, went ahead and did the straddles last night, and one guy did them this morning, and brought in some pretty nice profits there. One guy said they sold 10 in the binaries based on the results and everything, and up 880. So not too shabby. But, it's a fun, cool way to trade. And looking on over, checking things out, and what we got going on. We have a few more fundamental things to check out. Not only do we have the pound rate statement coming out, we also have the euro rate statement coming out. That comes out tomorrow at 7:45. So the pound comes out at 7, the euro comes out at 7:45. So obviously look for both of those to be moving, and which direction, who knows? But that's where deviation levels come in. That's where Nadex comes in. Trade with completely defined risk. So again, I want you to repeat after me. Defined risk trading, okay? So not just going in and trading with massive leverage on forex and futures and the chance to get stopped out in 5 seconds, okay? But defined risk trading. And when you're trading, you want to know, what's your expectation on how far it will move. Well, if there is a surprise, which there easily could be, we just got a surprise from the Aussie recently, right, on their rate statement. So if there is a surprise, and you go in here, look at euro dollar, and you go, okay, well, you have the deviation levels in advance, so they get posted tonight. Then you have access to them, and you'll be looking at a move, up to, say, 1.2881. Or down to 1.2749. So that would be something you'd be looking for on a statement like that. You might even just look at a half deviation, okay, and look to take maybe partial profits at a half deviation, and then take the rest of them at a 1 deviation move before a rate statement announcement. That's one way to play them. After that comes out, then we'll have the trade balance report over in Canada. That's going to be happening at 8:30 a.m. tomorrow. And trade balance report, pretty big report, and that's the difference between what was imported versus what was exported during the previous month. And so the expectation that number is going to be down, even basically down to negative 1.4 billion. It came in at negative 1.3 billion last month, and so it'll be interesting to see how that one rolls out. And I'll go ahead and pull up these websites because you probably want to know where to see the live results right here. But this is the diffusion index right here that you can see and you could use if you were trading and looking for these reports. And I'll also post these over in the Tiger's Den. And also to show you the main website for it is statistic.gc.ca. Again, statistic.gc.ca. And go ahead and pull up the bank rate statements and everything that you may need for this as well, for Britain and for England. So here we go. We got one of them. We'll go over at bankofengland.co.uk. And we'll go down. Let's see here. We got the European one coming out. Right, you'll be able to find the rate statements and everything on there. Okay, and then over on Europe, you'll be able to see on the ECB's website, which is ecb.int. Okay, so we talked about it a little bit earlier, but under the press releases section, you'll be able to find the ECB website and the important numbers on that. And the one other report we talked about that comes at the same time as the Britain bank rate is the asset purchase facility. That also can be found over on bankofengland.co.uk when that comes out. So quite a few reports, quite a few trading opportunities that you can take advantage of. And we got, looks like even a couple more. I mean, it's a pretty big day tomorrow. So that's just the overnight. That's just the basically leading up to the market open there. And then after the market opens, or at the market open there, not only do you have the trade balance on Canada, but we also has an ECB press conference. So the president and vice president are going to be speaking. They speak for about 45 minutes every month after the minimum bid rate is announced. So, depending upon exactly, now that comes out at 7:45. This is scheduled for 8:30. So yeah, that's 45 minutes after. They'll be coming out. That's 8:30. So that's a little bit before the market open. 8:30 a.m. versus 9:30 there. And then scrolling on over and looking at the trade balance and unemployment claims. So trade balance and unemployment claims for the U.S. both coming out tomorrow. Again, that's imports and versus exports for trade balance. And that website can be found over in the Bureau of Economic Analysis website for the United States. That's bea.gov. Again, bea.gov. And you can find that report over there and get updates on basically as they come out. They'll post them up on their website, and they'll be under international, and that's where you'll find that information. Again, bea.gov. And then looking on over, we got the unemployment claims number. Obviously, a big hot topic, still a hot topic, and maybe even more of a hot topic now. I'm not quite sure, but because it's never going to come out, people are going to go, "What are you going to do about it?" So you want to look at that. That's going to be on dol.gov. And again, that's dol.gov. That's where they post the latest report for the unemployment claims. So we'll keep on going. We're a lot of fundamentals coming out this week. The elections, obviously the big highlight, and all this other stuff, just minimum bid rates, everything. So a lot happening tonight and tomorrow. Stay right there. Be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin. Again, if you have any questions, feel free to give me a call right here at 1-877-927-6648. And go ahead and run down on the diagnostic deviation levels. And just a reminder that you're able to go in and get access to these right away. 2-week free trial, no cost on the trial there. And try it out risk-free. Check out not only the box spread analyzer, but if you're interested in trading on Nadex, we have tutorials in there. We have the box spreads. We have a lot of things. But if you're a futures forex trader, get access to the deviation levels. And you have access to them, like I said, when I post them every night. And they're based, again, on what I do is I go and I take the implied volatility out of multiple months options and make it, in essence, a volatility index, and I factor that into the expected move formula. And instead of using historical data, okay, on historical prices, I'm using the expected market move based on the implied volatility. And it's very, very helpful for, setting profit targets, for doing stop losses, for checking out, potential reversal plays, things of that sort. So there's a lot of different ways that you can trade it. And going on in and looking at these levels right here, right now, we can see, obviously, this is a more, not your standard day in any means, but we'll go ahead and pull them up nevertheless and see exactly what we got. So let me see here. I'm going to move this out of the way. I'm going to pull this over here and move a chart down so we can just take a quick review of the deviation levels for the day. So right here, looking over at the S&P, and moving on down, we'll go into Let's see, intraday, we'll check out, just need a couple days here, and go into 10-minute bars. There we go. All right, so there's an expectation that the market would move down at least to 1403. Obviously, it did that. That would be the first, basically when it hit 1403, be the first point you'd be looking to, tighten your stops. And moved on down further, down to, 1392.75. So we got down here, 1392.75, be tightening stops again. Now, the farthest the expectation of movement, the furthest you should expect the market to move, okay, a 3-deviation move, 1382.75. And you can see that's 1384. So, I mean, it literally got like a point away before it went ahead and pulled back. But when it gets that close on 3 deviations, if you haven't closed already, it's time to close. And for a one-day move. And, I mean, about at this time here, right around here, when it's starting to hit down here, it just did a little bit of a pullback. I went ahead and I closed out all my short trades that I had on, because I'm like, you know what? It's not moving more than 3 deviations. If it does, wow, that's a miracle. Whatever, who cares? I'm out. So I've maxed out my profits for the day, and I'm happy. So I went ahead and got out of the trade. So that's where it comes into place, is letting you know, okay, hey, you shouldn't expect the market to go in. There's only a 0.3% chance that the market moves further than 3 deviations. Okay, we go in and check out the Russell. The Russell, we had an expectation. If we go all the way down, the 3 deviation expectation was 796.5. Look at that, 798.5. So again, now we don't expect it ever really to move 3. We expect it to move 1. But as it does move, you're tightening your stops. So we got down within a couple, a point and a half. You definitely need to be tightening your stops all the way down, especially when you get that low. And I mean, just every bar, just tightening it down. And would have been a great way. And as you can see, market came right to it and it just started chilling out and pulling on back there. Hopping on over, checking out the NASDAQ. So sort of seeing the same little theme right here across the board. Came on down to 25.99. We expected 25.88. So literally, barely any change there from the expectation. And as it got closer and closer, again, as soon as that passes that 2 deviation mark, especially, if you're going in, you're tightening literally on every single bar out of the previous bar's high. And, we're basically, the move down for the day should pretty much be done. So we shouldn't really expect any further move at this point. Looking on over at the Dow. So on the Dow, we got to move down to 12,827. And 12,827, we expected to move down to 12,835. So it actually popped through the 3 deviation mark, but then pulled on right back from there. And if you hadn't closed out already, you definitely would have shut down. And you'd have been glad you did. So like I said, I mean, we really had a massive move. I mean, we're really talking like this, 7 ticks below the 1235 mark. And right there. So that's 3 full deviations. And it pulled on back. And obviously this being a historic moment because things are the same and everybody thought they'd be different. So, or people were hoping or thinking or, I mean, even no matter what, just at the end of the day, we got fiscal cliffs, we got taxes, we got whatever. And nobody knows how they're going to solve it. Because if history is any indication of the future, then it ain't going to look good. And we're going to have a 2013 that's going to look a whole lot worse than a 2012. So looking on over and checking out copper. On copper over here, what do we got going on? Copper moved down to 3.431, and we had an expectation of 3.458 for our 1 deviation move. We definitely hit that right here. And so as soon as we hit that, we're tightening our stops. And moving on down to a 3.43. So literally just, basically, 2 ticks away from a 1.5 deviation move, and the market basically flattened out and pulled on back up. Looking on over and looking at a couple of the others, let's check out some silver. So on the silver side of things, we had silver. It went on ahead and it ran up a little bit to 32.42. That was actually 32.42 would have been a 0.7 deviation overnight. So we tightened them at 0.5, we tightened them at 0.7, we tightened them at 1. It did that. It started falling back down. It moved back down to 31.2 on the downside here. And 31, basically 0.2 over here would have been a move down to 1.5 deviations. So the move down, we've been tightening at 31.49. And then it hurt at 31.2. Again, we're at 1.5 deviations. So it moved up about 0.7 and then down 1.5 total. So some pretty massive moves. And I'll wrap up right here with gold. And on gold, we'll come back and we'll check out a couple of the other ones here. But gold moved up to 1733, and we had an expectation that gold would rise up to 1733. Actually, was a 1 deviation move. 1731.7 would have been 1 deviation. So as soon as it broke that, you'd have been tightening stops. It gave it all back and fell down to about 1703.5. 1703.2, which was a 0.7 move down. 1703.3 was the 0.7. So again, tightening stops as soon as it hit that on the way down, tightening stops on the way up. And both of those giving you great tightening stop directions. No matter which way you were trading, you could have used them to help you tighten your stops. So if you're trading long last night or short this morning, both of them very, very helpful. And it looks like we have a caller on the line. We got Garo. Hey, you there, Garo?
Yes, sir. How are you?
Hey, I'm doing great. So how things going, man?
Here, I shorted Agrium AGU at $98. It was I shorted on was 10 o'clock Eastern time on the second candle of the 30 minute. Should I keep it or should I cover it?
Well, let's see here. Let me check it out. AGU.
Yes, it's Agrium. It's a fertilizer company.
Okay.
Canadian. Yeah.
Awesome. Let me pull this up right here. I'm going to do a little bit of info for you on AGU so that way I can give you my full analysis. So you're basically just doing a quick intraday trade here. And I'm going to go in and pull up a deviation on it for you. So see if I can get that there. And looks like on the downside on AGU, yeah, I'd be closing it. I'd be closing it right now. So yeah, it's already past its full expected move. So there's really nothing left. But yeah, I mean, it's a great trade. You're profitable. You're up about $1.50 right now. You said you're in around 98.
Yes, I have. I bought it, short it at 98, but I have only 200 shares, not more than that, because I wasn't sure that this is going to come back right away or it's going to slide more. So I'm here. I'm about $1.30, $1.40 in profit.
Yeah, I mean, I definitely wouldn't want to give that up. I mean, as far as the downside move there, let's see, ticking back up. I'd be looking. The thing is, the market as a whole right now is basically done for the day. I mean, it may move back down a little bit, but we don't expect a big move on the market overall. And so you got 96.55. I mean, you could put a stop, just to see if, I mean, you get up a little bit of the profit, but you could put a stop above the high there, like 97.10, 97.01. But I mean, that'd be about 50 cents of profit on a couple hundred shares. So that'd be where you could put a stop loss out right now for an intraday style trade. But I mean, it's not a bad trade for hopping in and hopping out within a couple hours. And I probably wouldn't hold it overnight because I mean, just look at that move. It could just as well pop back up tomorrow. And if we look over at the advanced decline, which is something you always want to be using when you're trading stocks or any kind of index or index future. And you can see the advanced decline line. This is all the stocks in the New York Stock Exchange total tick values. It's considered the broad market index. Okay.
Yes, sir.
And you can see how all the stocks have really been pulling back up ever since that low this morning when it just about hit the third deviation level there. And so as it moved on back, I mean, it's moving back up right now to about where it was right on the open. Just dropped right down. So right now, I mean, we're sort of at you could say almost a support level on the advanced decline. But I'd have a very tight stop if I didn't close right away. So for an intraday trade.
Right. You think this is going to pop up in the morning?
I mean, after a big day like this, I wouldn't be surprised to see a little bit of a pop, overnight in the morning. And I mean, I expect the market to be down for the week. I think it'll probably be up by the end of the month. But as far as overnight, I mean, this is a massive move.
Yes,
so
yes, that's right. It is a candle is sitting right on the daily charts, right between 50-day and 200-day. It's just in the air. So I'm afraid it will go up or it's going to go down. Let me do something. Let me cover it now. Let me get my profit, and then tomorrow is tomorrow. I'll think about tomorrow.
There you go. So you can always hop back in tomorrow if the thing doesn't pop up and it's still moving down. That's right.
Yes,
so you're never going to be upset about taking a profit. So as long as you had your risk and reward in check, at all times. So that's good.
Yes. That's what I will do. I thank you very much, sir, for your time. I appreciate it. Thank you, sir.
You bet, man. Have a great day.
Sure. Bye-bye.
Bye. All right, so that was Garo from Alaska. Thanks for calling in, man. So love to have you call in on a consistent basis there and check out some stocks and add some variety to the show, which is always a good thing. So we're looking at so many different markets. A lot of times we're focusing on Nadex, but I love looking at everything and looking at stocks. One of the things that's sort of a good lesson at this moment is you can do this on NinjaTrader, you can do it on Thinkorswim. but you want to have the advanced decline ratio. And basically, again, that's looking at the net of all stocks being sold and bought on the New York Stock Exchange, whether they're up or down, and then basically using that as a trend gauge for the overall market. And it's very, very helpful. And even in combining with stocks, like we're just talking about right here, if you're looking over at the deviation levels and you see that, hey, you know what, the stock market as a whole has really hit sort of bottom for the day based on a 3 deviation move. So my stocks as a whole that I'm short, probably at this point looking to take profits because there's not really a lot of room left for them to continue to move, further down than they've already moved down for the day. And, you can see the S&P has just been pulling up ever since it hit that level this morning. And so it's going to drag the other stocks with it. On a general basis, you have most of them traveling in the same direction. And so, that's just how stock, when you're looking at futures, you can have gold going one way and the S&P going another and your dollar going another or whatever. But, when you're looking at stocks, stocks are usually stocks. So there are the ones that stand out, And, you got your sitting stocks and you got your bellwether stocks and your staples and, all that stuff. But they have, their little bit of, their own little bit of a trend to them. But overall, the majority of stocks travel together. And so when you see the index moving, the futures moving or hitting certain, expansion zones, then you should expect that the stocks as a whole will also start to pull back. And that can really be helpful for take profits, even when you're looking at stocks. And when I pulled up over there and I was looking at Agrium there and checking it out, I already saw that it already busted through its 3 deviation. So I was like, yeah, we're done on that one. And it was a matter, when you have a gap fill, that gaps obviously are going to have more of a tendency to make that happen. And so let's go ahead and check out a few more of the deviations and their impact so far on the market today, and what we can do to see if there's anything here left open. I think most of them just move so fast that a lot of the potentials are done for the day. You could try to do reversals. That would be your one possible play. And natural gas here, we got natural gas moving over. Let's see here. The expectation was for a move down to 3.537 on the low side. That'd be a full deviation. It didn't quite make that, but it did have a 0.7 at 3.561. So right here at 3.561. So if you were short natural gas last night, or if you decided to hop in again this morning and get short, then that definitely would have been where you've been tightening your profits on both times. Okay, and probably looking to get out of that trade. I don't know if I'd be reversing it, but we do have the natural gas inventory report, by the way, coming out tomorrow. So always a fun trade to go in and play with over on Nadex, and always on like we talked about yesterday. If you didn't watch yesterday's show and you want to trade the news, definitely check out the archive from yesterday on the Diagnostic Trading Hour. That's Channel 7 over there on TFNN Tiger TV, and I went through, basically an Aussie dollar news trade and, when to get in, when to get out, so how to set take profits, things like that. And just a few, important tips that you need. And let's see, we got oil. Oil, man, whew, oil's moved like crazy today. And believe it or not, with that big of a move, with a 3.5% move, there was so much implied volatility, it actually didn't even hit its 3 deviation move. And it's down to 84.54 on the low of the day, and it's bounced back up about 70 cents right now. And 84.54 was just below 2 deviations, but not quite to 3 deviations. So stay right there, folks. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Wrapping up a few more markets, and just knocked out the oil markets there. And again, oil had the 2 deviation mark there on down to 84.99. So once it broke that level, really back here at 84.99, you've been looking at, let me go back into the 10-minute bars. It's a little more accurate way to trade there than hopping in on those 1 minutes. So we got 84.99. Then you've been tightening your stop immediately, and right there on the high, 85.19. Not a bad place to get out on a short trade on oil for the day. And hopping on over, that's oil. What else we got? We got corn. So looking on over at corn and checking that out. Moved down a little bit, moved up a lot on the open. I mean, just took off. And on the downside, not anything just like fantastic. Down to 733, and that is a move up almost to 0.7 deviation. So 733 would have been a 0.7 deviation, but then it just flipped around and went in the other direction. I mean, just crazy high. 751.75 off of that, and so corn moved up 751.75. That would have been right. I mean, you're talking 3 ticks off of a full 1 deviation move. And really, that is a deviation move from the low to the high. It's more than a deviation move from the low to the high. But from yesterday's close, or really settlement price, you'd have that 1 deviation right there. Just like I said, it's a few ticks away. And as you get to 0.5, you're tightening. As you get to 0.7, you're tightening. So obviously, it got to 0.7. It almost got to 0.1. And really, and I always say this, within a point, 10 pips on, if you're looking at currencies or within a point on, any of the futures markets there, or, at 10 ticks on the Dow if it doesn't have, individual like points that break down into smaller ticks. Tighten it up. And but even if you didn't, okay, if you just waited, that bar closed up, you're waiting, you're moving it up again to the low of this bar right here, low 747. So you got out 747. If you went long on that trade, congratulations. I don't know how you would have saw that one coming, but if you called it, that's awesome. But it definitely did follow right within the expected moves on corn and pulled on back as soon as it hit that. Looking on over at our soybean market. Let's see here. Make sure we're looking at the right contract. Got it on it. And soybean moved down to 14.9725 in the overnight, and almost a full deviation moved down. Definitely tightened at the 0.7. You could easily call this short. You can see the trend going short there. But they did the same thing. Flew back up. And stuff like this ought to scare you. Okay? It really ought to scare you if you're looking at trading futures, because this stuff can happen. It can happen on any of the futures markets. And, you're talking to move. Let's see. Let's just check this thing out. Okay? Let's say you got in. And, obviously, none of us have ever bought at the low and sold at the high, right? But, or vice versa. Sold at the low and bought at the high. That's definitely one of those things that's extremely painful if you've ever experienced it. And let's see here. High 1517.5. So 1517.5 minus 1497.25. That's 20 points, okay? It's $50 a point. So one contract in a very short period of time, that's $1,000 loss, okay? If you're trading on Nadex, you're not going to have $1,000 loss. I don't even think it goes $1,000 wide on the widest contract. Let's see here. I'll check it out. We'll look at it right now. So if I hop over on Nadex, and I go over and I go, okay, range of markets, and let's go over to commodities, and now let's scroll on down to ags. So we got our agriculturals here. We'll go to contract specs, and right down here, obviously on the binaries, it's never more than 100. If you're doing the spreads, because that's as wide as they get, and I go down to ags, the widest spread over here is, see, on soybeans could be $100 wide, $50 wide there, so 5.0 strike. That's the strike width. So, but the total width and does not even add up to the amount. We'll talk more about the details and the spreads on tomorrow's show on ags. But I can't believe the show's already over for the day. But I hope you all have a great day, a great trading day. I'll be seeing you tomorrow right here on the Diagnostic Trading Hour, and here in a little bit I'll be on the show with Tommy. So, y'all have a great day. Stay tuned. We have a great show coming up for you.